Bank Kenya has reported a 10.7 billion shillings profit after tax for the first half of 2024, marking a 29% growth in the bank's earnings from 8.3 billion shillings recorded in the same period in 2023. Managing Director Abdi Mohamed has attributed the performance to the stabilisation of the shilling against the dollar and manageable inflation to within the targeted range of 4.7%. However, according to Absa's Finance Director Yusuf Omari, despite the growth in customer deposits and the balance sheet, many wholesale customers are now opting for short-term loans due to the current challenging business environment. Mbogoh now talks us through the bank's earnings for half year.
Thank you very much to our media fraternity. We continue partnering.
In a half that has seen players within the financial sector contend with a mixed bag of fortunes, the case was the same for Absa Bank, which saw the growth in revenue increase by 16% to stand at 31.8 billion shillings. With the net interest income growing by 20% to 23 billion shillings, while non-interest income went up by 8% to close the first 6 months at 8.8 billion shillings. Customer deposits also grew by 6% to 353.3 billion shillings, allowing the bank to extend credit worth 64 billion shillings to customers. 18 billion shillings of which went towards sustainable projects, while another 12 billion shillings was disbursed to fund startups. An additional 5.4 billion shillings was used to fund SMEs. The diverse portfolio left the lender exposed to bad loans, which grew from 9.2% in the first half of 2023 to 11.2% in the first half of 2024, even as borrowers moved towards short-term facilities.
To about 39.4, so it's about 7 billion shillings increment in NPL. Of this figure, about 4 billion is actually on the personal household. So it's to the earlier point we mentioned that we've seen the retail customers getting impacted, especially because of the high interest environment.
In response to these current economic realities, the bank says it has undertaken deliberate action to support its customers by restructuring upwards of 1.4 billion shillings in loan for retail consumers impacted by tough economic times. To further reduce the operating costs, the bank says it is set to invest a further 3 billion shillings in technology.
We can come here every half year to talk about numbers, to talk about balance sheet, revenues, etc. But underpinning all of this is the stories such as the ones we just saw on the video, which is customer stories and how we continue to engage with our customers.
The bank now says it will be focusing on diversifying its revenue streams with scalable payment solution, enhancing customer experience, as well as advancing financial inclusion through digital finance, digital savings, affordable housing, and SME offering like Wezesha and micro insurance. Even as they express optimism that further rate cuts will see credit to the private sector grow and inject the needed capital into the economy. Mbogoh, Citizen TV, Nairobi.